Hey everybody, my name is Kenneth and I teach my 219,000 TikTok followers how to trade stocks if they're interested, invest, and live below their means, which I think is one of the more important aspects of this whole channel and everything I talk about. And going to the gym, this is something I make a lot of videos about, health equals wealth and all of that. But it really is so linked. Your first month in the gym, you're not going to really see much progress, right? And this is a somewhat timely video too because of New Year and New Year's resolutions. And we're going to start seeing, if you're a regular in a gym like I am, you're going to see January 1, that gym is going to be packed. It's going to be packed, and I'm support. Look, a lot of people come on and they complain about, oh, who are all these new people crowding up my gym? Get out of here. I don't like it. I'm supportive of it, obviously, because I want everyone to be healthier and get in shape and maybe lose some weight or build some muscle or improve their endurance or get more flexible, whatever. But I can't help but notice that by early February, 70 to 80% of the people who joined in January are gone. Never see them again. And I wonder if that's true for new investors as well, because it takes time. You know, the stock market isn't a casino. It's not well, maybe it is for some people, but it's not meant to be a casino. It's meant to be a slow wealth builder over a long, long time. And I think maybe the same people who go to the gym expecting immediate results are the same people who come to the stock market and think, I'm going to get really, really rich really, really fast. And to be honest, this is something I can relate to because a long time ago, when I used to work the front desk at a gym and I made $7.25 an hour, I was one of those people. I was one of those people who looked at the stock market as my ticket out of this dump. You know, I was making $7 an hour, answering the phone, signing people up for spin class, getting yelled at by my manager for not tucking in my shirt or wearing the wrong kind of pants. You know, talk about this a lot, but I used to wear those Adidas pants with the 3 white stripes down the legs, which was trendy back then. But company policy said they had to be all black pants, which I thought was so stupid because the front desk at the gym came up to like chest level. So no one could see my pants. I didn't even have to be really wearing pants if I didn't want to. And we'd fight about this all the time. And I was like, man, I hate this. I don't know what I want to do with my life. If you know me and you've watched my other videos, you know that I wanted to be a professional wrestler when I was younger, and I broke my back training to do so. So that dream gone. No other plan, no other idea, no other thoughts, nothing else that like spoke to me as a possible career. And there were these guys who would come to my gym and they would talk about stocks that they were buying. And in my naive state, I would look at them arrive in a Mercedes, BMW, Porsche, Range Rover, and they were older. They were all probably retired. And so they're talking about stocks, they're driving luxury cars. My mind went to, I better copy what these guys are saying. It doesn't matter. I don't have to know anything. I'm just gonna eavesdrop. Anytime these guys came into the gym, I would run upstairs. I would call someone and say, hey, I have to go to the bathroom. Can you wash the front desk? And I'd run upstairs, and as these old guys were tying their gym shoes or putting their coats away, I'd eavesdrop and I'd listen to see what stocks they were talking about. And this is pre-smartphone, so I'd probably have a piece of paper in my pocket, and they would say, oh, I'm buying this one, I'm buying that one, and I'd go, ooh, ooh, and I'd write them all down. I had a lot of money at the time, even though I was early 20s, because I was living at home. And prior to the gym, I worked in the restaurant industry where I worked double shifts, and I made a lot of money working double shifts. All that money was in the bank, and I had no idea what to do with it. And so I'm listening to these guys. They're talking about stocks. They're obviously rich because they have nice cars. They live in an affluent neighborhood. I'm gonna copy. I'm gonna do what they're doing. And I won't get too much into it. If you know my story, you know I lost a lot of money copying these guys. But I viewed it as a fast, easy way out of my minimum wage jobs. I didn't have to know about the stock market. I didn't have to love it. I didn't have to know about charts and day trading, swing trading. All I had to do was buy what they were talking about and I'd get rich. And I think, so I can relate to people who have that mentality and that idea of just give me the easy way out. You know, and that's why I think bodybuilding supplements, fat loss supplements are so popular, because so many people want the quick fix, the easy way out. Give me the stock that's going to make me rich. My I have a friend whose mom was realizing that she wasn't really in the right path to retirement. And man, that's a hard conversation for me to have with anyone, especially my friend's mom. And she called me and she said, "Hey, let's talk. I want to start investing. I'm eager to retire. My hips hurt, my knees hurt, my back hurts. I want to retire." And I said, "Okay, how much money do you have saved up?" And she said, "Nothing." And I said, "Well, how much do you have invested?" And she said, "Nothing." And I said, "Well, what's your living situation like?" And she's like, "I just became a first-time home buyer." I said, "Just?" And she said, "Yeah, well, everyone always says a home is a great investment." And I said, "Yeah, for 30-year-olds, not 65-year-olds, you have a 30-year mortgage, right?" And she said, "Yeah." I said, "You're probably I don't want to sound mean here, but you're probably going to die before you pay off your mortgage." And she's like, "Oh." And I'm like, "How much is your mortgage and all that?" And it turned out that her mortgage and utilities and everything, homeowners insurance, all that stuff was near double what she had been renting a place for. And I said, "How are you going to pay for this if you're retired and you're not making money?" And she, "Oh, I didn't think about that." So this was a harder conversation. I've made videos on this conversation before, but at the end I said, "Hey, how much do you have to invest?" And she said, "Kenneth, I have about $500." And I said, $500 a month? And she said, "No, $500. Give me a stock. Give me a stock." And it reminded me kind of what we were talking about in this video of people who say, "Give me a sure bet. Give me the quick fix. Give me the stock that's going to make me rich. Give me the supplement that's going to burn my stomach fat or make me really jacked. Give me something." And I understand it, especially today, in our climate today, where rent is skyrocketing. And, a lot of people just write it off as greedy landlords and corporations, and that can be true. But there's another side of this as well, which is maintenance costs for old buildings, increasing condo fees for old buildings, increasing utility fees for buildings. Homeowners insurance goes up. All of these things go up. And if you're a landlord, whether you like them or not, they have a mortgage, they have condo fees, insurance, utilities that they're covering. And the more those prices go up, the more they have to raise their rent, not necessarily to make tons of profit, but to cover just the basics. A lot of landlords are breaking even, in other words, or minimal profit, $80, $90, and they have to put a lot of that money in reserves in case the refrigerator breaks or something happens. I'm not in defense of landlords. I'm just painting a little bit more detail for people who might just say all landlords are evil and they raise the rent and they screw tenants over. Many of them do. But the larger point here to all of this is I can relate, and I understand when people say how expensive it is. And please give me the easy stock. Give me the fat loss pill. Give me the penny stock or the cryptocurrency that's going to blow my portfolio up and I'll be able to retire. I unfortunately, I think that's the wrong approach to take to the stock market. And I can say I relate because I used to do that. I would listen to those guys. I would go and dump thousands of dollars into these stocks just sitting there like this. I hope it goes up. I hope it goes up. And this is not a strategy. For all of the success stories you hear of, I bought the stock and it skyrocketed, I bought this crypto and it skyrocketed, the majority of people cannot relate to that, haven't had that experience. And even if they were able to buy that stock or that crypto, oftentimes to make a lot of money, you have to put in a lot of money. So I could buy a stock, NVIDIA, for example, at $200 a share, and now it's $450 a share. And if I bought one share and you bought 10,000 shares, and we both bought it at the same price in the 200s and sold it at 450, we'd make the same percentage gain, but the dollar amount, the profit would be so much higher for the guy who bought 10,000 shares versus the guy who just bought one or two. And we got a barking dog outside. That threw me. Now I have no idea what I was talking about. For all the success stories, most people lose money. Most people go, "Damn, he made all that money on this stock or this cryptocurrency. All right, I'm going to find one and I'm going to do the same thing." Then they get wrecked, they lose their money, and they go, "Stock market sucks," and they walk away. That's why I'm a big fan of doing things in reverse, starting with the largest boring index funds, ETFs, dividend stocks, and then a little speculative, not the reverse of lots of speculative and the boring stuff, who cares? But like I said, I understand it. We want a quick fix. We want immediate. We don't want to go to the gym 3-4 years, cut our calories, restrict what we're eating, give up the fun junk food. We don't want to have, we end up crash dieting, right? A lot of people come into the gym and they say, I'm giving up everything. And 2 weeks later, they're done because it sucks. A lot of people do the same with the stock market. They say, give me the highest risk. I want to make a lot of money really fast. And when it doesn't work, they give up. So the point of this video is to encourage people out there who are listening and watching this to, whether it's your fitness goals or your finance goals, they are so linked. Don't expect big fat returns right away. It's hard when we want our ticket out of the stump, when we want to make a lot of money and we want to make a lot of money really fast because our situation sucks. But don't look at the stock market like that. Look, Charlie Munger, who just passed away, Warren Buffett's right-hand man, had this great quote. I'll put it on the screen if I botch it here, but it was something like, the big returns aren't from the buying and the selling, but from the waiting. So many people look for quick returns that often wreck them. One off the top of my head is Zim. The Zim is the Israeli shipping container company that at one point paid a 100% dividend. Insane. Tons of people on social media rushed to the stock. They bought as many shares as they could, and they went, yes, this is going to make me a lot of money. I hope this thing keeps going up. And what ended up happening? The stock lost an unprecedented amount of value. They cut the dividend. So speculative is fine. Make it the smallest part. And look for something else to be the thing that generates the wealth now. Don't look to the markets for that. It's a great way to get discouraged, lose all your money, and never invest at all. Don't look to the markets for that. Start a side hustle. Learn to code. Walk dogs. Live below your means. A lot of these things are going to be, by the way, very hard choices that a lot of people don't want to make. For example, a lot of my friends who have real financial hardships now have 3 or 4 kids. And I say to them, well, how can you afford credit card? I go, well, why'd you have 4 kids? Well, we thought things would get better. We thought our job, we thought we'd get paid more. We thought we'd be able to afford a house. We were waiting for the housing prices to come down. Instead, they kept going higher. But most of it is personal choices. Having more kids than you can afford, having more pets than you can afford, living in a snazzy apartment downtown instead of maybe living in the suburbs or in a less popular part of town where the rent is a little bit cheaper if you have to rent. Or another hard choice, taking roommates. A lot of people don't want to have roommates. They view it as, hey, I went to college, I got a good job, I have a career. I don't want roommates. That was for college. I'm an adult now. And so they put themselves in a situation that financially hurts themselves instead of saying, let me be uncomfortable for 3 or 4 years. Another option, of course, the least popular one, is moving back home with your parents. And I know a lot of people are not about it. And a lot of people don't have the situation in which they can move in with their parents. A lot of parents say, hey, if you're living at home, you're going to have to help, because parents are in the same financial hardship that we're in today. I have a lot of friends who have kids, and my friends are at the same time still in their 40s paying off their college debt, are now trying to plan for their own kids to go to college, and they're creating savings accounts, and they're worried about their own kids going to school. And we see it with our aging parents as well, where they're looking at things going, gee, I can't really retire right now. I'm going to have to keep working. Maybe this, maybe that. So moving back in with your parents might not be the greatest solution. Although maybe your parents might say, hey, you're paying $2,000 a month in rent, move home. Come live at home with us and pay $300 a month in rent. That will cover our utility bills or our condo fees or our HOA fees, whatever it is. Look to be uncomfortable. I know that's unpleasant. I know we don't want that, but it can make a world of difference in the long term. By making yourself uncomfortable, frees you up to have maybe more money to invest, or maybe not, because look, everything is expensive. But even just getting in that investor mindset can pave the way for you to become an investor down the road. So you might look at the markets and go, but I can't afford 100 shares of this company, or I can't afford a dividend paying stock. That sucks. but you're thinking in the right way, which is maybe one day I can. So maybe you start with 1 share of a company. Maybe you start with 0 shares and you just start researching. You start Unbelievable. My phone ran out of storage in the middle of my video, so I lost my train of thought. Anyway, the point to all of this is to get into the mindset. If you can't afford it, get into the mindset. I guess since my phone is almost out of storage, I don't want to talk for too long and run out of storage again and have to restart this video. So thanks for watching. If you thought this video was helpful, you know what to do. Hit the bell, hit the notifications, leave a comment, share it with a friend. Thanks for watching. I'll see you later.